So imagine you're scrolling through your feed and you see that billionaire investor Bill Ackman just made a huge bet on Uber.
All right.
Should you follow his lead?
Good question.
That's what we're going to unpack today as we dive deep into Uber's recent performance and what the future might hold.
Yeah, we've got some really interesting material to work with. Excerpts from a Motley Fool article called Billionaire Bill Ackman is Buying Uber Stock.
Okay.
Should you?
I like it.
Published February 11th, 2025, just a few days ago.
Very recent.
It sparked a lot of conversation.
It definitely caught my eye.
Yeah.
So let's start with this Ackman guy.
Okay.
Why should his moves matter to the average investor?
Well, Ackman is known for making some pretty savvy investments, often contrarian investments.
Okay.
He's not afraid to go against the grain
I see.
and buy into companies when others are kind of shying away.
The article mentions Chipotle
Yes.
during their E. coli crisis
Exactly.
as a prime example.
Yeah, a lot of people were terrified,
Right.
but Ackman saw an opportunity.
Yeah, and he was right.
He was right.
He bought a large stake in the company when the stock price was down
Yep.
and ended up making a substantial profit
Huge profit.
when it rebounded.
Yeah, the article says around 600%
Wow, 600%.
on that investment.
That's wild.
It is.
So now he's betting big on Uber,
Mm-hmm.
but he's not just blindly throwing money at it.
No, he's not.
He's actually praising their CEO, Dara Khosrowshahi,
Yeah,
the changes that he's made.
Khosrowshahi, right? Yeah.
Yeah.
He took over at a pretty turbulent time for Uber.
I remember that.
They were facing controversies left and right.
Yeah.
The delete Uber movement allegations of a toxic work culture.
Yeah.
Regulatory battles all over the place.
It felt like they were constantly in the headlines.
So.
For all the wrong reasons.
Yeah.
I remember thinking that their brand was like irreparably damaged.
Yeah, you would think so.
How did they manage to turn things around?
Well, Khosrowshahi
Yeah.
shifted the company's focus
Okay.
towards profitability and sustainability.
I see.
He sold off non-core businesses like their self-driving car unit
Interesting.
and pulled out of markets where they weren't performing well.
Okay.
So it was a pretty dramatic streamlining of their operations.
So he basically decluttered the business.
He did.
And got rid of anything that wasn't contributing to their bottom line.
Exactly.
And that seems to have paid off.
It did.
The article highlights that 2023 was Uber's first profitable year ever.
First one.
Wow, that's a huge milestone.
It is.
I'm starting to see why Ackman is so bullish on them.
Yeah, and it gets even better.
Oh, really?
In 2024, Uber generated a whopping $7 billion
$7 billion.
in free cash flow.
Okay, hold on. Can we break that down for a second?
Sure.
What exactly does free cash flow mean?
Okay, so free cash flow is
Yeah.
essentially the cash a company has left over
Okay.
after paying for its operating expenses and capital expenditures. It's a measure of how much money a company is actually generating
Okay.
and how much it has available to reinvest in the business, pay dividends, or reduce debt.
Okay, so a high free cash flow is a good indicator of a company's financial health.
Absolutely shows that the company is not only profitable, but also generating cash that can be used to fuel future growth.
Right.
And in Uber's case, that $7 billion figure is incredibly impressive,
Yeah.
especially considering their history of losses.
Okay, so we've established that Uber is making money.
They are.
What's driving this growth? Is
Yeah.
it just their ride-sharing business?
Well, ride-sharing is still a core part of their business,
Okay.
but they've also diversified into food delivery with Uber Eats.
Right. Uber Eats.
And that's been a game changer for them.
Yeah, Uber Eats has become incredibly popular.
It has.
Seems like everyone I know uses it.
Yeah.
How much is it contributing to their overall revenue?
It's actually become a much larger part of their business than many people realize. In some quarters, Uber Eats has even surpassed ride-sharing
Wow.
in terms of revenue.
I had no idea it was that significant.
It's a testament to the growing demand for convenience
Right.
and the power of on-demand services.
Makes sense.
Uber Eats has done a great job of partnering with a wide range of restaurants, too,
Yeah.
which has definitely contributed to their success.
So they're making smart moves. They're diversifying their revenue streams, and they're finally profitable. It seems like Uber is on a roll,
They are?
but there's one major wild card that could disrupt their trajectory.
What's that?
Autonomous vehicles.
Ah, yes, the self-driving cars.
The self-driving cars.
That seems to be the big question mark hanging over the entire transportation industry.
Right.
Companies like Tesla
Yeah.
and Alphabet are investing heavily
Okay.
in developing self-driving technology, and it's advancing rapidly.
It is.
Imagine a world where fleets of robotaxis are roaming the streets,
Yeah.
offering cheaper and potentially more efficient rides. That could fundamentally change Uber's business model.
And the article mentions that Tesla is already planning to launch a robotaxi service in Austin, Texas this year.
That's right.
That's a pretty bold move.
It is.
Are they just sitting back and watching this unfold?
What?
Or are they taking steps to adapt?
They're definitely not ignoring it.
Okay.
Uber is taking a strategic approach
Okay.
by partnering with key players in the autonomous vehicle space,
I see.
like Waymo.
So instead of trying to beat the self-driving car trend, they're trying to join it.
Exactly.
Interesting.
By integrating self-driving cars into their network,
Yeah.
they're hoping to maintain their market dominance
Right.
even as the transportation landscape evolves.
Yeah.
It's a fascinating strategy.
It is. It sounds like they're trying to position themselves as the ultimate transportation platform, regardless of whether the cars are driven by humans or algorithms.
Right.
But is it enough to ensure their future success?
That's the billion-dollar question.
Yeah.
And to answer it,
Yeah.
we need to take a deeper look at Uber's financials
Okay.
and their competitive landscape.
All right, let's dive into those numbers.
Let's do it. You know, when you look at Uber's financials, the first thing that jumps out is their price-to-earnings ratio, or PE ratio for short.
Okay, break that down for me. I hear PE ratio thrown around a lot, but I'm
Right.
not always sure what it really means.
Basically, the PE ratio tells you how much investors are willing to pay for each dollar of a company's earnings.
Okay.
It's a way to gauge whether a stock is overvalued or undervalued.
So what's considered a good PE ratio?
Well, there's no magic number.
Right?
It can vary depending on the industry and the company's growth prospects,
Okay.
but generally a higher PE ratio indicates that investors are optimistic about the company's future growth potential.
Okay, what about Uber's PE ratio?
Yeah.
What does that tell us?
The Motley Fool article states that Uber's current PE ratio is around 30.
Okay.
Now, for a company like Uber, which is considered a high-growth tech company, a PE ratio of 30 is actually pretty reasonable.
Interesting. So even though they've had a dramatic turnaround,
Right.
investors aren't going crazy
Right.
and overpaying for their stock.
Yeah.
What else should we be looking at when we assess Uber's financial health?
Another crucial factor is their revenue growth.
Okay.
How quickly are they increasing their sales, and is that growth sustainable?
The article mentioned that their gross bookings,
Yeah.
which is essentially the total value of rides and food deliveries, grew by 18% in 2024.
That's right.
That sounds pretty impressive.
It is, but it's also important to look at their profit margins.
Okay.
Are they able to translate that revenue growth into actual profits?
No, they are right.
Yeah,
We talked about that $7 billion in free cash flow they generated last year.
exactly.
Yeah.
So from a financial standpoint, Uber appears to be in a very solid position. They're profitable, generating significant cash flow,
Right.
and their growth trajectory looks promising.
But as you mentioned earlier, we can't ignore those external factors.
Like the rise of those self-driving cars,
Self-driving cars, yeah.
that could have a big impact on their future earnings.
Absolutely. Investing always involves balancing potential rewards with potential risks.
Right.
And in Uber's case, there are certainly both.
Okay, so we've talked about their financials. What about their competition?
Yeah,
They're not the only player in the ride-sharing game.
that's true. They've had a longstanding rivalry with Lyft,
Right.
but Uber has consistently maintained its position as the market leader.
Yeah. How have they done that?
Well, they've done this in part by scaling back on those costly rider and driver incentives that were eating into their profits.
You're talking about those crazy discounts and promotions they used to offer
Exactly.
to attract riders and drivers?
It was a race to the bottom, and it wasn't sustainable in the long run.
Right.
Now they're competing more on factors like convenience, reliability, and the breadth of their services, which includes Uber Eats, right? They've built this whole ecosystem around transportation and food delivery. Speaking of Uber Eats,
Yeah.
I'm curious to know more about their strategy with the Uber One membership program.
That's a smart move on their part.
Okay.
Uber One is all about creating a sticky ecosystem that keeps customers engaged and coming back for more.
It's like the Amazon Prime of transportation and food delivery.
Exactly. You pay a monthly fee
Yeah.
and get all these perks and discounts.
And with 30 million subscribers already,
Right.
it's clearly resonating with customers.
It is.
But what makes it so successful?
Yeah.
Is it just about saving money, or is there more to it?
Well, discounts are definitely a major draw.
Right.
People love saving money, especially on things they use frequently.
Yeah.
But it's also about convenience. But with Uber One, you don't have to worry about surge pricing or fumble with your wallet for every ride or delivery.
Right.
It's all seamless and streamlined.
So it's really about creating a frictionless experience.
Precisely. And that's a huge differentiator in today's market.
Mm-hmm.
But Uber One also provides a steady stream of recurring revenue for the company.
So instead of just relying on individual transactions, they have a base of loyal subscribers who are paying them every month.
Exactly. It creates more predictability and stability in their earnings.
Okay.
But it goes beyond just the financials.
Oh, really?
Uber One also helps deepen their relationship with customers and gather valuable data about their preferences and habits.
Data that they can then use to personalize their services and offer even more targeted promotions and recommendations.
You got it. Uber One is a strategic asset that's helping them build a stronger, more sustainable business. It's almost like a flywheel effect.
Okay.
The more members they have, the more data they collect.
Right.
The better they can tailor their services.
Yeah.
Which in turn attracts even more members.
It's a clever strategy.
It is.
So for those of us who aren't billionaire investors like Bill Ackman,
Right.
What's the key takeaway here?
Yeah.
Should we be buying Uber stock?
That's the million-dollar question, isn't it?
It is.
It's certainly tempting,
Yeah.
considering their strong financial performance and their efforts to adapt to the changing transportation landscape.
Right.
But remember, investing always involves risk,
Yeah.
and there are no guarantees.
We've talked about the potential threat of self-driving cars, but what other risks should potential investors be aware of?
Well, for one, the ride-sharing industry is still heavily regulated,
Okay.
and there's always the possibility of new regulations that could impact Uber's business.
Right.
For example, there's been ongoing debate about the classification of Uber drivers as employees rather than independent contractors.
Right. And if they were forced to reclassify their drivers, that could significantly increase their labor costs.
Exactly.
And potentially impact their profitability.
Exactly. And then there's always the risk of competition from new players entering the market.
It seems like there's a new ride-sharing or delivery app popping up every day.
It's a competitive space.
Yeah.
And there's no guarantee that Uber will always be the dominant player.
So it's not a slam dunk investment by any means.
It's not, but for investors who are willing to accept some level of risk
Okay.
and who believe in Uber's ability to navigate these challenges, it could potentially be a worthwhile bet.
Okay, so we've talked about Uber's financial performance, their competitive landscape, and the potential risks they face. But there's one more angle I want to explore.
Okay.
What about the broader societal impact of Uber's growth?
That's an important aspect that often gets overlooked in these financial discussions. The rise of ride-sharing has had a profound impact on our cities and our transportation habits.
It's completely changed the way we get around.
It has.
I remember when hailing a cab on the street or waiting in a taxi line was the norm.
I know.
Now it feels like everyone just opens the Uber app.
Exactly, and it's not just about convenience.
Okay.
Ride-sharing has also provided new economic opportunities for drivers, particularly those who might not have had access to traditional employment.
It's become a gig economy powerhouse.
It has.
Offering flexible work arrangements that appeal to a wide range of people.
Yeah, but there's also a flip side to consider.
Okay.
The rise of ride-sharing has contributed to increased traffic congestion in some cities.
Because if it's easier and often cheaper to take an Uber, why would people bother with public transportation?
That's the dilemma.
Yeah.
And it raises important questions about how we balance the benefits of innovation with the need for sustainable urban planning.
It's a complex issue with no easy answers.
It is.
But it's something we need to be thinking about as these technologies continue to shape our world.
Absolutely. It's not just about the bottom line.
Right.
It's about the broader societal impact of these innovations.
Okay, so we've covered a lot of ground here.
We have.
We've looked at Uber's financial performance, their competitive landscape, the potential risks they face, and their broader societal impact. What stands out to you the most from all of this?
You know what strikes me is Uber's resilience.
Okay.
They've faced their fair share of scandals and setbacks, but they've managed to adapt and evolve.
Right.
They went from being a company embroiled in controversy to a profitable, forward-thinking industry leader.
It's a remarkable turnaround story.
It really is. And it speaks volumes about their leadership.
Okay.
And their willingness to embrace change.
Yeah.
It's a valuable lesson for any business, really.
Absolutely. But they're not out of the woods yet.
Right.
They still face significant challenges.
They do.
Particularly with the rise of autonomous vehicles.
Yeah.
It'll be interesting to see how they navigate this next chapter.
It certainly will. It's like they're at a crossroads.
Yeah.
Which path will they choose?
Right.
Will they be disrupted by self-driving cars or become a leader in the autonomous revolution?
It's almost like a choose-your-own-adventure story.
Exactly. And the ending is yet to be written.
Okay, so with that thought-provoking note, are we ready to wrap up this deep dive into Uber's world?
I think we've covered just about everything.
Yeah.
We've looked at their past, their present, and their potential future.
Mm-hmm.
Hopefully you have a better understanding of what's driving their success, the challenges they face, and the broader implications of their growth.
And whether or not you decide to follow Bill Ackman's lead and invest in Uber,
right,
we hope you've gained some valuable insights from this conversation.
Investing is all about doing your research,
Mm-hmm.
weighing the risks and rewards,
Right.
and making informed decisions that align with your financial goals.
So do your due diligence, keep an eye on those self-driving cars, and remember that the world of tech is constantly evolving. You know, as you've been talking about Uber, I keep thinking about how their success isn't just about financials and technology.
Right.
There are some pretty big ethical questions swirling around them, too.
Absolutely. That's a really important point.
Mm-hmm.
And honestly, it's something that every investor should consider.
Yeah.
What are the ethical implications of the companies they're supporting?
Like, take the whole debate about whether Uber drivers are employees or independent contractors.
Right.
It seems like such a simple question. But it has huge consequences.
It does. We see it playing out in legal battles.
Yeah.
Protests. Even Uber's business model hinges on the flexibility of using independent contractors.
Okay.
But for drivers, it often means they lack benefits,
Right.
job security, and basic worker protections.
It's a tricky situation.
It's a tough one.
Definitely. And it feels like society as a whole is still trying to figure out where the line is.
Yeah.
How do we balance innovation with fair labor practices?
Right.
It's a question that goes way beyond just Uber.
Absolutely.
It impacts the entire gig economy.
The whole gig economy.
And then there's the issue of data privacy.
Yes.
Uber collects so much data about its users.
They do.
Where they go when they travel, how they pay.
So much data.
It's a gold mine of information.
It is.
And how they handle that data is a big deal.
Huge deal.
Especially with all the concerns about data breaches.
Right.
And how companies use our personal information. I know I feel a little uneasy thinking about how much Uber knows about my movements.
It's a valid concern.
Yeah.
It raises questions about transparency and accountability.
Right.
Do users really understand how their data is being used?
Right.
And what's being done to protect it?
It feels like a constant tension between the convenience these apps offer and the potential downsides when it comes to our privacy.
It is a trade-off.
Yeah.
And those ethical dilemmas aren't going to disappear as Uber continues to grow. They'll only become more complex and more important to address.
So as we wrapped up this deep dive, I want to shift gears a bit and think about what this all means for you as a listener and as an individual navigating this world where tech is advancing so rapidly.
I like that we've talked a lot about Uber, but let's zoom out and think about your own role in all of this.
We often think of ourselves as passive observers of these changes. But in reality, we all have a part to play in shaping the future.
Absolutely, as consumers. We have the power to decide which companies we support, which services we use, and what values we prioritize.
And as citizens, we have a voice in shaping policies and regulations that govern these emerging technologies.
Absolutely.
Every time you open that Uber app or see a self-driving car on the street, remember, you're not just watching the future unfold. You're helping to create it.
You're part of it.
And that's pretty powerful when you think about it.
It is.
It reminds us that we have a responsibility to engage with these technologies thoughtfully and ethically.
Couldn't have said it better myself.
So on that note, we'll wrap up this deep dive into the world of Uber. We've explored their financial performance, their strategic moves, and the ethical questions they face. Hopefully you've gained some valuable insights to help you make informed decisions about how you engage with this rapidly evolving industry.
And remember, the world of tech is constantly changing.
It is.
There's always something new to learn and discover. So keep exploring. Stay curious.
Yeah.
And we'll catch you on our next deep dive.
See you next time.